Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Okay, if you are into scalping and you are looking for ways to optimize your trades, then this video is for you. Okay, we are going to talk about the best moving average settings for scalping and how you can fine-tune your strategy to get better results in the market. So by the end of this video, you will know exactly how to set up your charts and apply the right moving averages to boost your scalping game. Okay, so let us dive in. Now, before we talk about the best moving average settings for scalping, let's quickly cover what scalping actually is for those of you who are new to the strategy. Now, scalping is a trading technique where traders look to take advantage of small price movements in a short amount of time. Okay, it's a high frequency trading method where you are making quick entries and exits in the market, often within minutes, sometimes even seconds. So the goal here isn't to make massive profits from each trade, but to capitalize on numerous small moves, stacking up gains over time. And when you are scalping, timing is everything. Okay, that's where the right moving averages come in and why they are so critical to your success. Now you might be wondering, why should I even use moving averages when scalping? Well, moving averages are trend following indicators. I'm just going to be adding an example on the chart, by the way. The moving averages are very popular indicators used by traders worldwide. Okay, they are trend following indicators and they help smooth out price data by filtering out the noise of day-to-day fluctuations. Okay, now in scalping, you need to know that the short-term trend, you need to know the short-term trend quickly so you can make your move, because scalpers are basically, they're always looking out for quick price moves, right? And that's the reason why they use the smaller time frames, because all you're looking out for is quick price moves, right? You want to catch every move in the market if possible. So scalpers usually focus on 5 minutes, 1 minute, 15-minute charts because they are looking to make a lot of trades, right? A lot of trades. Okay, now moving averages can help you to capture short-term trend. Okay, they can help you to capture short-term trend. However, not all moving averages are created equal. When it comes to scalping, you need to pick the right settings to capture those small price movements quickly without lagging too much. So let's look at the best ones for scalping. All right, so what are the best moving averages to use for scalping? In my experience, there are a few key moving averages that stand out for scalping strategies. Okay, and these are the exponential moving average, the simple moving average, and the weighted moving average. Okay, now talking about the EMA, you know, we have a variety of moving averages. We have the SMA, we have the EMA, we have the smoothed moving average, and we have the linear weighted moving average. These are just the ones that are available on the MetaTrader platform, the MetaTrader 4 platform. Okay, because we have a variety of moving averages. All right, so the EMA gives more weight to recent price action, and that is the reason why scalpers use EMA a lot. Okay, because the EMA is responsive to is more responsive to price changes. Okay, so we are currently in the 5-minute time frame, and you can see how the EMA is with respect to price. Okay, now we're just going to be changing this SMA, and you're going to see how it looks. Can you see? You see, now let's look at the recent price. Just look around here, and then you can see this is the SMA, right? Now let us go to the EMA, and you're going to see where can you see that the EMA came closer to the candlestick. So if you are a scalper that it's using the EMA, you will get your signals faster, because when the price is bouncing off the EMA, because you know some traders use the bounce as entry signals, right? So when you have price bouncing off the EMA, it gives you a signal. However, if you are using the SMA, then you might get confused when to enter, because you can see that in this situation, the price did not even get to the moving average before it began to go back up. So you will likely not always get a bounce before, you know, the price reverses or pulls back, right? So there are situations where the price touches the SMA. That's absolutely, you know, normal. It happens, right? But as a scalper, you are looking to catch every single move. So if the SMA does not always give you that bounce that you are looking for, serving as a floor or serving as a ceiling, then you might get smaller trades compared to someone who uses the EMA. Can you see? Can you see? Compared to someone who uses the EMA. Okay, so unlike the EMA, the SMA gives equal weight to all data points in the calculation, which means it is less responsive to recent price changes. All right, but don't count it out just yet. Okay, the SMA can also be helpful in identifying the general trend over a longer period. Okay, but for scalping, you might want to just focus on the EMA. All right. And then in terms of the weighted moving average, let us look at how the linear weighted moving average reacts. Okay, so you can see the linear weighted moving average is also a moving average that can be used by scalpers. All right, weighted moving average gives more importance to recent prices, but with a linear progression. Okay, it's with a linear progression. So this makes the WMA more adaptable than the SMA, but less sensitive than the EMA. So traders typically use WMA when they want a balance between the sensitivity of the EMA and the smoothness of the SMA. So to summarize, EMAs are ideal for short-term, fast trades. Okay. On the other hand, SMAs work well for smoothing out trends, and then WMAs give a good balance. So for scalping, the EMA is your go-to in most cases. All right. So I'm just going to be changing this back to the EMA. Okay. All right. Now let us talk about how to use this moving average for scalping. Okay. So as a scalper, basically you want to trade on shorter time frames, like the 1 minute, 5 minutes, or 15 minutes. All right. And then a shorter time frame, helps you to catch the small price movements that are characteristic of scalping. The 9-period EMA is fantastic, right? It's fantastic for these time frames, okay? As it gives you quick signals while still smoothing out the noise. But if you are looking for a bit more accuracy, because one thing to know is that the smaller the period, the higher the chances of a false signal, right? Yeah, the higher the chances of a false signal. So in as much as you can use the 9-period EMA, I will recommend that you use the 21 instead, okay? Use the 21 instead for the 5-minute chart, okay? Now, a great way to increase the accuracy of your scalping signals is to also use a combination of moving averages. You can decide to use the crossover strategies by adding on another moving average. If you want to use the crossover strategy, I will recommend that you add on the 9 EMA. So the 9 EMA is going to be a short-term moving average. So when you have a bullish crossover, that's your buy signal. When you have a bearish crossover, that's your sell signal. However, if you want to use just one, EMA, then what you have to be looking out for is when price cuts above the EMA and is bouncing off the EMA upward. That's your bullish signal, right? And then on the other hand, when you have price cuts below the moving average and is bouncing below the moving average, that's your sell signal, right? So you can decide to use one EMA or you can use 2 EMAs, whichever one that is preferable for you. Okay, don't be afraid to experiment with different moving averages and settings. Okay, market conditions can change. All right, and what works one day might not work the next. So it is crucial to adapt your strategy based on volatility and momentum. For instance, during a trending market, you might want to use a longer period EMA to capture bigger moves. Okay, while in a choppy market, a shorter period EMA might be more effective. Okay, so while moving averages are fantastic tools for scalping, risk management is just as important. Mind you, it is not enough to know technical analysis, right? If you do not know how to manage risk, you might end up losing a lot of money. So it is important that with your knowledge of technical analysis, make sure that you know how to manage risk effectively. All right. So now here are a few risk management tips for scalpers. The first is set your tight stop loss. Okay, set a tight stop loss because you are trading on short time frames. Having tight stop losses is essential to protect your capital from large drawdowns. All right, keep them within a reasonable range based on the volatility of the asset you are trading. Now, secondly, use a risk to reward ratio. Okay, even though scalping involves small gains, you should still ensure that your risk to reward ratio makes sense. All right, as a scalper, you can actually settle for 1-to-1. Okay, because because it is scalping. So if you want to use the usual recommended risk to reward ratio of 1-to-2 or more, it might not always be very feasible on scalping. Okay, so that is the reason why a ratio of 1-to-1 is common in scalping strategies. So if you're risking $1, your profit target can actually be $1. Okay, well, it should not go below 1 to 1. And then thirdly, your position sizing. Never risk more than a small percentage of your account balance on any one trade, especially when scalping. All right, especially when you are scalping, make sure that you do not risk a large amount of your account per trade. You can just be targeting between 1 to 2% of your account, actually. 1 to 2% of your account per trade is ideal. All right, so there you have it. The best moving average settings for scalping and how you can optimize your trades with the right settings and tools. Okay, remember, the EMA is your best friend when it comes to scalping. Okay, especially the 9 period and the 21 period EMAs. Okay, those EMAs can be, can be quite effective, right? Those EMAs can be quite effective when you are using them to scalp. Okay, so if you found this video helpful, don't forget to hit that like button and subscribe to the channel for more trading tips and strategies. However, it's important that I point out the fact that combining your moving averages with support and resistance levels, trend lines and all of that is important, okay? Because, these levels can give you, potential reversal points. They can help you confirm the signals you get from the moving average. And you can also combine, the moving average with other indicators, maybe like the RSI or any other indicator of your choice, just to get additional confirmation. Okay, so please, if you found this video insightful, please hit that like button and subscribe to the channel for more trading tips and strategies. Also, feel free to leave a comment if you have any questions or want to share your scalping experiences. Thanks for watching and happy trading.